is going to be a fascinating interview, so stay tuned for that. First, let's tell you what drove the markets today. With today's data download, all three indices ending the session with big gains. The S&P and the Nasdaq ending in the green for the fourth straight day. Materials and financials were really what muscled us higher. The best performing sectors. What lagged? Telecom. Almost 90% of the stocks in the S&P 500 did finish higher, so there's a good bet your portfolio had a nice bump today, or at least your 401k, you can only hope, right? The Commerce Department reporting housing starts fell 4.8% in May. That is below analyst expectations. It wasn't bad, okay? Permits for future construction jumped to the highest level in nearly 4 years. And Treasuries falling today ahead of the Fed's rate decision, pushing yields up from their lowest levels in 2 weeks. The 10-year note rose 5 basis points. It's still pretty low, though, 1.62%. David.
Well, we got Larry Schober. He's been trading all day in the pits of the CME Group. Tim Holland is bullish on the market. He says investors should take on some risk in their portfolios. And Jason Pride says not so. Now is the time to be cautious. Tim and Jason are going to be here to battle it out in a street fight. But first, let us start with Larry Schober at the CME. Larry, let's start with what the Fed is doing, whether this rally that we saw today is just another kind of sugar high rally because of expectations of what the Fed is doing, or whether there's something more substantive going on.
I think the latter is true, David. You know I'm a bull right now, but I don't think it has much to do with the Fed. Let's be honest. We have a QE3 right now. With rates down at 1.62%, we don't need a QE3. I think it's more about the press conference tomorrow, maybe an introduction to another Jackson Hole speech where they're going to extend like the other policy that they have in place where they're long so many long-term securities. They can
Operation
extend
Twist,
things.
yeah.
Thank you. Thank you very much. I don't think there's going to be a QE3 because we have a QE3, but the market just needs confidence, and it's going to get it tomorrow.
Yeah, the Operation Twist, by the way, for those of you who don't understand it, they're trading out some of their shorter-term maturities with lower interest rates for the longer term with barely higher interest rates. Larry, what was the feel in the pits today? I mean, and I know that you guys were all sitting there chattering with each other because I've seen it before, but is the chatter really surrounding tomorrow versus yesterday?
You know, the chatter is this. We've rallied 7% since June the 4th on really nothing. The broad narrative has not changed. The market is undervalued. Everybody understands that. What we're seeing is a lot of long chasing, a lot of short covering. You don't see a whole lot of people laying out a bunch of longs right now.
Okay. Larry, we're going to see you in a few minutes when the S&P futures close. So everybody stay tuned for Larry. He'll give us an indication of how the markets might open tomorrow.
So while U.S. economic data and Europe's debt crises rattle the market, should investors play it safe, or is there room to add a little risk to your portfolio?
Time for a street fight. Get ready, everybody. For the Bulls, we have Tim Holland, Tamro Capital Partners portfolio manager. And for the Bears, we've got Jason Pride, Glenn Mead, Director of Investment Strategy. All right, going to start with Tim because you're the bull. What makes you a bull right now?
Sure. We think the market's had a couple pillars of support really the last 2-3 years. Valuation, balance sheets, operational performance, and sentiment. Most investors have gone away from stocks, not towards equities. We think what's new past 6 to 9 months in particular, is that housing bottomed at some point in the back half of last year. It's a big positive for consumer sentiment spending. We think the consumer is in the best shape they've been in probably 4 or 5 years. And you've got substantial liquidity, not just from our central bank, but from central banks around the world. And some of that liquidity is going to find its way into U.S. equities.
Well, Jason, what's new for me is that people like David Rosenberg, who'd been a bear for as long as I can remember, is turning a little bullish. But you say he's way ahead of any kind of substantive rally. You, in fact, mentioned the R word, a recession. You may not think we're in one now, but do you think we're close?
Look, we're not in a recession at this point in time, but the reality is, while we may be able to piece together a long-term bullish positive argument, this is not a straight path solution or progress that we're on at all at this point in time. There's still a lot of obstacles that the economy are facing, both from a fiscal and financial standpoint at the government level, as well as from a near-term economic perspective. And our economic indicators have turned soft recently, despite the possible action of the Federal Reserve, and they will likely remain soft throughout the summer, providing more downside risk on a near-term basis. Even though we could be long-term constructive, that downside risk is something that we have to protect against for our client base.
I'm looking at both of you. And I'm thinking these are two smart guys. They've both made great arguments for where they stand. Now comes the real nitty-gritty. And so I guess, Tim, you've got to prove to me that I should be on your side. Is it the Fed coming in with a government trade of extending that so-called Operation Twist that will continue to prop up this market? You seem to be looking more at fundamentals of companies.
At Tamarack Capital Partners, we're stock pickers. We're not market forecasters. So we try and own businesses that have a sustainable competitive advantage where the potential upside is at least 3 times as great as the potential downside. And when we look across the market, small, mid, and large, we see great franchises trading at very attractive prices, like an Amazon.com and
But
mega
can I just say something? I mean, I've talked to more CEOs who say, I'm doing everything right. I'm executing all of my plans. I've got great employees. We've got great product, great ideas. But every time a bad headline comes out of Europe, my stock goes down.
Yeah. Now, our trader back at Tamarack calls them tape bombs. And what you see, Liz, is as the headlines sort of dissipate, you get back to valuation, you get back to fundamentals, and the market seems to get a bid. So our view goes way beyond what the Fed may or may not do. We see great companies, great balance sheets, attractive prices, and an asset class that the world has run away from for years now.
Well, and Jason, the onus is on you as well. I imagine from a lot of your customers saying, look, if you say it's a bad time to get stocks, to get into stocks, maybe with certain exceptions, what do I do? Just put my money in gold?
Well, this is where we think you have to be smart. I would love to take the perspective that Tim's taking and take a completely long-term perspective and say that every investor that we have is a perfect 10-year investor. That's not reality. Investors just aren't, they don't act like 10-year investors. When they feel a downturn, they tend to react in the wrong direction at the wrong time. So our approach is, let's try to find the best risks out there. Those don't exist on the extreme of high-risk equities or on the extreme of non-returning, underperforming inflation, cash, and treasuries. It actually exists in the middle of the risk spectrum. That's high-yield bonds, high-quality equities, and more esoteric strategies like covered call portfolios and hedge funds.
Guys, thank you. We got to have you both back because who knows what's going to happen with this market. Jason Pride, Tim Holland, we appreciate your advice. Thanks, gentlemen.
Two very smart guys.
Thank you.
All right, we've got breaking news right now. Robert Gray has Adobe earnings.
Yeah, that's right. Adobe coming in pretty well for their second quarter, beating by a penny, 60 cents a share, revenue $1.2 billion. But it is their forecast, and it is all about Europe, blaming a weaker demand out of Europe for their forecast right now. Their third quarter, they're seeing revenue of just $1.08 billion to $113 billion. So only if it reaches that upper end of the forecast would it hit the average estimate from analysts. So below that, shares are sliding in after hours. The forecast for their profit bottom line non-GAAP earnings would be 56 to 61. Again, the estimate is 61 cents, so it would have to be the most optimistic of their range to meet that estimate. And again, obviously, many analysts expecting even higher. And their full-year revenue growth, they're seeing it not quite as robust, only as much as 7% prior. They saw it as much as 8% for the year. So again, shares sliding on that forecast due to a weaker demand out of Europe.
Well, and Larry Shover, yeah, we see about a 4% drop after hours. We don't know if it's going to open at this tomorrow. But, Larry, one of the key things that has hurt the company is the rise of the iPad and the iPhone because they don't use the Flash, Adobe, and so forth. But what about Microsoft? Could Microsoft ride to the rescue of Adobe?
It could, but that's the thing that remains really troublesome in the market, and that's priced into the options report because the options we're talking about a 4% move, that's what we got. But when it comes to skew, the amount of what people buy for downside was incredibly high. Skew was really high. People are very worried about Microsoft coming to the rescue, especially when you look at Oracle, you look at Google, you look at Amazon, all the other competition they have, it remains a real trouble spot. Analysts are very cautious with the stock because of that.
Okay, so even though it beat on the revenue, in fact, forecasts are not looking too good, and it is trading down after hours. Larry Shover, thank you very much. Well, one member of the European Parliament is fired up about the Eurozone crisis. Take a listen.
It is total and utter failure. This ship, the Euro Titanic, has now hit the iceberg, and sadly, there simply aren't enough lifeboats.
Nigel Farage is going to be joining us live from London with who he thinks could get one of those lifeboats.
And again, we're talking Microsoft. Hot story today. Stock up nearly 3%. It wants to crush Apple with its brand new tablet, the Surface. Could this really be a real rival to the iPad? We're bringing in two top tech analysts. They are on opposite sides of this issue. One says Apple should be very worried. The other says hardly.
Also, Sears is getting into the travel business. We're going to tell you about the retailer's new online travel site. That's coming next. Could this be a solution for Sears' problems. And as we go to a break, take a look at some of the other travel stocks, also today's S&P winners.
Good day, sunshine. Good day, sunshine. Good day, sunshine. I need to laugh, and when the sun is out, I got something I can.
The Closing Bell is sponsored by TD Ameritrade, where a smart game plan starts with smarter trading tools.
Let's level the playing field. Take the privileged investing tools of Wall Street and make them simple, intuitive, and available to all. Distill all that data. Make information instinctual, visual. Introducing Trade Architect, TD Ameritrade's empowering web-based trading platform. Take control of your portfolio today. Trade commission-free for 60 days, and we'll throw in up to $600 when you open an account.
The global economic crisis, the fallout, the fix, and the future. Dobbs kicks off prime time at 7, followed by coverage of Obama's address from the G20 summit. Then Cavuto goes live with in-depth analysis of the president's remarks. Our special prime lineup starts at 7 tonight.
Let's say you need to take care of legal matters. Wouldn't it be nice if there was an easier, less expensive option than using a traditional lawyer? Well, LegalZoom came up with a better way. We took the best of the old and combined it with modern technology. Together you get quality services on your terms with total customer support. LegalZoom documents are accepted in all 50 states and they're backed by a 100% satisfaction guarantee. So go to LegalZoom.com today and see for yourself. It's law that just makes sense.
Dad, my computer is so slow.
What's the matter?
It's just old. Let's go to the store and get a new one.
Fix it online at PCmatic.com.
PCmatic.com.
PCmatic is a free download that boosts performance and a lot more. That's PCmatic.com. PCmatic can make this faster, but you also have a virus. PCmatic with Super Shield makes sure you never get another virus again. Look here. PCmatic sees you're also freezing, right?
It's really slow and I have to restart it a lot.
PCmatic can fix all of that with a click of a button.
Wow. Thanks to PCmatic, my computer's running a lot faster. And the virus is gone.
Online video should be faster too. PCmatic also boosted your internet speed.
Will PCmatic keep my computer running this way?
PCmatic runs automatically and sends a report to your inbox.
Well, thanks to PCmatic, I guess I don't need a new computer. And we can get back to the game.
Go to PCmatic.com today for your free download. That's PCmatic.com.
Shabani Joshi, technology.
Netbooks, laptops, desktops, and we have a tech bonanza.
Charles Payne, money.
This one had a whole lot of momentum. We want to start to help people make money.
Expert insight, smart analysis, only on Markets Now, weekdays.
If 5 minutes goes by and we haven't mentioned Facebook, it's been a while, so let's mention it. Facebook doing something today it hasn't done since the company went public last month.
Let's head back to the floor of the New York Stock Exchange where Nicole is there to tell us what it is. Nicole.
How about 4 straight days of gains for Facebook? May 18th was the IPO. The high was 45, the low was 25 and change. But what we're looking at here is that Facebook, which has quietly been gaining and made an acquisition, right? Looking now to buy Face.com. That's a new recognition software. Recognizes your face, it tags, it identifies. And we had the Coca-Cola company coming out today, the chief marketing officer, and saying that Facebook actually is a great indicator, probably a leading indicator of sales. So it's interesting to watch it quietly climbing 4 straight days in a row, first time ever for Facebook.
Well, if they can buck the bad news from the first day, that'll be something. Be good
It's going
stuff.
to take a while. Thank you very much, Nicole.
S&P futures closing right now, 15 minutes past the hour every day. Let's go back to Larry Shover at the CME.
Yeah, you know, we've rallied 4 days in a row. We can't deny that. But I think traders are looking through the piecemeal noise that we've had the last couple of weeks and realizing there's going to be some type of broad policy response, whether it be tomorrow, whether it be July 5th with the ECB, or whether it be June 28th when we have the EU summit. Out of those 3 things, something good's going to happen. I think that's being factored into the market right now.
Oh, something good. We'll take it. Thank you so much, Larry.
Thanks, Larry. And it is time for a quick speed read of some of the day's other headlines. Looking at the scoreboard. We're all tied up 5-5.